Alright guys, welcome back. TGIF. Hope you guys had a good week. I wanted to share a trade today I took on NQ. Um, the trade today was a little bit against my bias, but I saw a setup that presented itself to me on the lower time frames. And I took it, so I wanted to go through it with you guys today, my thought process, and basically the psychology and also the approach that I took mentally towards this trade today. So a lot more on the mental side of things today rather than technicals. But let's get down to it. So as we can see here on the daily time frame, the week basically, this whole week has been bullish. On Monday, there was a bullish up close candle. Bullish up close candle. Tuesday, another one. Wednesday, another one. Thursday, another one. And it was on Thursday that you could see that the bullish momentum has really cemented its position. Why do I say that? Because you can see here there was a daily fair value gap that was put in, but on Thursday the candle closed beyond it. And what is that telling me? It's telling me that price is potentially looking to continue its bullish momentum and possibly targeting these equal lows here. So in the next, I would say, I don't know whether the price is going to reach this buy side liquidity slash equal highs in the session today, given that it's Friday. A lot of traders and the market will look to possibly take profit, and on the weekly candle it's probably going to be closing around here with a bit of a retracement, but we'll see. So this buy side liquidity here is probably going to be met maybe the next couple of days, who knows. But with that equal lows, equal highs here that price is generated, it's definitely looking to be a possibility. Anyway, back to the charts, and on the 4-hour we can see as well on Wednesday price took out liquidity here before rushing upwards. On Wednesday it's where the CPI news happened. That was a bullish move towards the upside, and you can see it's running towards the equal highs here. That's the drawn liquidity. And also on the overnight session on Wednesday, price displays towards the upside, putting in a 4-hour fair value gap, which price eventually respected on Thursday, manipulated this sell side liquidity here before rushing up once again, creating another bullish fair value gap. So and we can see here it's basically price is telling you that it's on an upside, right? And it's possibly looking like a long-term or like a high time frame market maker buy model. Well, that's what I think. All right, so with all this in place, you could see that it's possibly a market maker buy model that's happening. So if we take those drawings away, and this is actually current price, I'm actually recording this video live 11 a.m. Eastern Standard Time. On the 1-hour chart, we can see as well today during the 9 o'clock or 9:30 open, price purge sell side liquidity level here, and you can see price generally has been consolidating and accumulating here since Thursday, and it also put in buy side liquidity here as well. So what I'm seeing in terms of pattern is that, let me just put my equal highs again. What I'm seeing in terms of pattern on the 1-hour time frame is that price will be doing a movement, something like this. So accumulation, right? manipulation, and distribution. But possibly not so straightforward. It's possibly going to be, it's probably going to, now you can see that it's purged that buy side liquidity for liquidity run. It's probably going to do another accumulation here, manipulation and distribution towards the upside. But we'll see. We'll see. So basically, on the high time frame, I'm still looking for price to be drawn here. But I was monitoring this today on the 1 minute time frame because I know that there's already buy side and sell side here. We can see if I put my thing on. Now today I was just being patient, right? Like if we're talking about the mental side of things, I was just being patient because on Friday price can tend to get a little choppy. And the last thing you want to do is when price is choppy is you want to participate. I only participate when the price is choppy. I only participate when my setup is clear, even when the price is choppy, and I slash my risk in half. So I'll still trade, but to make me more comfortable in taking that trade, I will cut my risk 50% just to give me that ease of confidence when I trade. So that's the mental side of things. Psychologically, it's better for me. I'll be able to sleep better. I'll be able to know that I'm there to protect my capital, staying alive. And in this game, what you want to do first and foremost is to protect your capital and stay alive. Because if you haven't got that capital, your arsenal, you won't be able to trade, right? So you can see 8:30 open here. Oh, sorry, where's 8:30 open? Let me go down to the 5 minute. So at the 8:30 open, we can see price came down, purged short-term sell side liquidity, pushed towards the upside, and there were all this low resistance liquidity around here, which price, like I said, will look to run, but it didn't run it at the 8:30 session. It ran it at the 9:30 session here. So I let price play it out because I wanted price to give me a little bit of structure before I participate in the trade. So let's take that low resistance liquidity run away, and that sell side liquidity. We can see this is a high time frame key level on a 15-minute time frame. Price purged it, traveled towards the upside, and if I just take that away and I put in the most current sell side liquidity when I was trading, and buy side liquidity when I was trading, and on the 1 hour time frame there was also another buy side liquidity that I plotted, which I wanted to show you guys as well. So on the 1 minute time frame, which I was monitoring, you could see here, this one here was the buy side liquidity that I plotted on the 1 hour time frame. So I'm just gonna name this high time frame buy side liquidity, and this was the buy side liquidity that price took out at the 9:30 open. But I did not take any trade until around, I would say, close to 10:30. We can forget about this sell side liquidity here because price has been taken. So where is your new sell side liquidity? It would be here, and your lowest hanging fruit of sell side liquidity will be here. So I'll plot that green. Now this is 9:30 open, like I said. Now, in terms of 9:30 open, you guys, I've had comments and questions on why I use the 9:30 open from some of my subscribers, some of the guys in the Discord channel, is because at 8:30 open, that's when a lot of news come out, right? It could be volatile. Definitely, there's opportunity to trade there, but at 9:30, it's when the US equities market open. I like to see what price action 8:30 has given me, and I have the information to work with. That will give me enough ammunition and information to let me know what 9:30 is going to do, because 9:30 is another opening time for NQ or whatever that you're trading for indices, it's another opportunity for smart money to manipulate. And indeed, it did manipulate the level here before running this low resistance liquidity run, right? But I didn't catch that move because it was violent, and obviously the risk to reward ratio wasn't that great because look, price only purged it here, and given that it's Friday, you know, I want to see price play out and give me that structure first. And also at 10 a.m. there was news that was lifted as well. It wasn't a red folder news. It was a I think it was UOM preliminary, but it was a news nevertheless. So I waited that to occur, and I kept monitoring price, and price continued to move towards the upside, generating a low resistance liquidity run here, sell side. This was what caught my interest. So price eventually took out a high time frame key level here, which was the 1 hour buy side liquidity, and quickly displaced towards the downside. You know, obviously there's a short-term turtle soup that was put in place here as well. There we go. We've also got change in state of delivery here, and with the displacement towards the downside, price also left a 1 minute fair value gap here. So that's basically my entry model. All right, like it purges the high time frame buy side liquidity or sell side liquidity, so we align the external purge with the internal level, or external level with the internal level. There's sell side liquid. That's, sorry, I should have said there was external swept, external being swept, internal being swept, being the turtle soup here. Change in state of delivery with displacement, which has left a fair value gap in its trail. And targeting, for me it was Friday, so I was targeting here, this green line here. Let me take that away. And why did I target here and not here? Because I just wanted to let my trade fulfill the lowest hanging fruit. So let me put my executions on. So I took this trade today. I sold it at 19,468, and my target was 19,412. Took it off here. It was at 19,432. I took it off a little bit earlier, which yielded me just over 30 points. I wasn't greedy today. So basically my risk to reward was I took my trade here. My stop loss was just above this fair value gap, targeting the downside here, which was close to 1 to 2. Why did I put my stop loss here? Because for me, if price were to engulf fully this fair value gap, it's going to indicate to me that price is willing to take the price upwards, and by closing this off bullish, it will indicate to me that price will look to take any buy side liquidity up here. And yeah, so Friday is always a little bit tricky sometimes. I'm glad I took it off the lowest hanging fruit, because now price eventually traveled all the way upwards, and if I had kept my position, I would have made a loss, right? So in terms of my mentality when I took this trade was I was patiently observing. I was going with the flow of the market. I was just taking what the market's giving me. I wasn't being greedy. As soon as price reached here, which is about a one-to-one risk to reward, I quickly trail my stop loss by 50%. That's how I do it. So that's my risk management approach. So when price reaches my first target, which is one-to-one risk reward ratio, I trim my position by 50%. And if price reaches 1.5, I move it to break even and I take one off. So that's my risk management tool. I was following my plan today. I was disciplined. I was waiting for my setup to occur. I wasn't being greedy. I did not oversize, because oversize kills. Just kills your confidence, because if you oversize, you're basically telling yourself to say that I believe my trade's going to play out, but the market's never always going to do that for you. You know, the market is random, and all it takes is one huge loss to really give your confidence a big blow. So really, really important to understand that. So on Fridays and Mondays, sometimes depending on how the market behaves, I do slash my risk in half, just to make sure that it's giving me that opportunity to stay alive. And whether it's a big win, small win, I'll take all of it. And that's all you want. You don't want a big loss. You can survive with a small loss, a big win and a small win, but never let yourself fall into a big loss, because it's very hard to recover. I've been there and it was painful. Anyway, hopefully this video was helpful for you. Thanks for watching. If you guys enjoy this kind of content, I've released a bunch of more charting sessions prior to this one. I drop a lot of stuff around how I trade, my trading plan, my trading approach, what I normally do, psychologically, what I look for, and how I behave when I trade, all that good stuff. So thanks for watching, guys, once again, and I'll catch you at the next one.